Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike York. Today is Tuesday, and it's October 1st, starting the new month and a new quarter here today. We do got a couple items on the economic calendar. This week is actually an important week in terms of what's on the calendar. We have jobs data this week for the month of September. So tomorrow we'll have the ADP. The following day, of course, every Thursday we get the weekly jobless claims. And on Friday we'll get the big BLS report for the job data for the month of September. If you recall, we had the sample week was a pretty strong number here, and we expect a strong jobs report coming Friday. They're expecting roughly 150,000 new jobs for the month of September. So time will tell if that what we receive as a report. So let's jump ahead here and see what we got here. Today we got the market manufacturing PMI. So we got basic manufacturing data here. We had a 51 back in August, and it had a slight uptick to a 51.1. But the more important one is this ISM manufacturing. This is the one that the economists and everybody else kind of really watches. And anything below 50 on these indexes is contraction period. So we did last month go into contraction period on the ISM at 49.1. Forecast was kind to go just above it at 50.2. However, it dipped further down at 57.8. So this is obviously not a good number, especially on the heels of yesterday when the Chicago PMI came in at contraction. And so we're really starting to see in the manufacturing in terms of a slowdown in the economy in terms of manufacturing so far. Construction spending is a lot less than what we expected. So in July we had basically no spending whatsoever. There's expected to be an increase of 0.4%. However, went up only 0.1% in the month of August. So let's jump ahead here. Headline news: stock started actually in positive territory. However, we'll touch on the time frame here, but now currently are in negative territory. Now, what started the morning off on a positive note was the Bank of Japan's announcement that they were going to pull back on their spending on long-term rates. They're doing the bond purchasing program, kind of like what we were doing quantitative easing. They've been trying to stimulate the economy, but by doing this, they were kind of figuring that they were hurting their banking system. So therefore, they're going to pull back on that because what's happening is they get the short-term rates coming in, and they're not able to make any money on the spread between the margin between the short-term and long-term rates, and therefore the banking system kind of weakening in that regard. So they want to kind of strengthen that up a little bit. Also, it's going to hurt the consumer sentiment in the sense that the population is kind of aging right now, and that's going to affect the yields on the long-term uh, investments that the older people have. So they're not going to earn as much or get as great of a return on their investments. So that was also a concern that played into it. So in the morning, the stock market was up, yields were up, and mortgage-backed securities were down. And after the ISM report came in, it did a 180. It did the opposite. So that was just kind of bringing in the fears of a possible recession around the corner. Again, the continued drag in manufacturing. It was just kind of a reminder in that regards. Now, China is celebrating this week their 70th anniversary of the People's Republic, and so this week they're kind of going in celebration mode. Uh, there was also an incident that happened in Hong Kong where a protester was shot, and they feel that maybe that could create more tensions in the Hong Kong area, that they would shoot another person. So let's kind of jump to see how this is playing in the bond market. Bond market was down. We were down starting out the morning, as we indicated, just below the 25-day and 50-day moving average. However, after the ISM shot up and the stock market started in the opposite direction, the bond market did that. So now we're up 23 basis points. We broke above both the 25 and 50-day moving average. We did that yesterday. However, as you can see, we started the morning up even further down as a result of the Bank of Japan's and the yields jumping up. Now we're up 23 basis points, and that's helping mortgage-backed securities to improve a bit. So we'll see some improvement in our mortgage-backed securities. As you can see, the yields were up. We're up. We pulled back. We started the morning down below the 50-day moving average, or 25-day moving average. We're way up above, even breaking above the 50-day moving average, and now we're down to about seeing rate about 1.62 range, just a hair right around the 25-day moving average here, or actually below it. So excuse me. breaking down below that. And we got a lot more room down here if we could stay below that. So that could be this might be the catalyst that may have helped us. Of course, the jobs reports this week would be pretty big news, so that could also boost it one way or the other as well. All right, so that's pretty much a wrap. The again, mortgage rates will have a little improvement today. We had a late day boost yesterday as well, so that continuation is going to help out interest rates today. So if you guys are looking to buy or refinance, you're in California, please reach out. I am a mortgage planner with Pinnacle Home Loans. We offer a wide variety of loan programs and can help you provide you the best solution. Best way to reach me is direct message me or email me. Reason being is I do get tied up on the phone today, and I respond a lot more to the direct messages or emails. All right, you guys have a great rest of your day. Thanks so much for watching. I'll catch you guys tomorrow. Bye-bye.